So see, yes, I mean, promoter buying is a soft signal that things are on the improvement scale. So if you look at their last quarter numbers, I think the EBITDA margin at 16% was definitely good, taking into consideration that the AdX spend has been slightly weaker. Also, if you look at their digital business, I think the EBITDA loss in Z5 at about say 135 to 136 crores was perhaps at multi-quarter lows. So definitely valuations are attractive at these levels. The stock is at about 9 times FY26 EPS. But I think for one to turn really constructive on this name, we'll have to see how the recovery in the ad environment happens. So if my memory serves me right, from 2Q of FY23, we have seen Zee's domestic ad revenue decline barring one quarter. So I think one should ideally wait for an improvement on the ad environment side, and if that happens, it can be an icing on the cake for sure.
All right. Hi, Jinesh. Good to see you. But Jinesh, valuation wise, I think the stock is trading at around 10 times, and they were guiding that margins will improve substantially in FY26. At around this 104, 105 mark, do you think it's well priced, or you would still wait by?
See, I think their margin guidance for FY26 is about 18 to 20%.
Yes.
We are at about 18%. And for FY26, I think they should be at about 15, 16%. So no doubt, I think on the margin side, after the merger fallout, the kind of work they have done on the cost optimization bit is really commendable. And at 18%, I think with a, EPS of about 11 and a PE of about say 10 times, it appears to be in the attractive zone. But see, honestly speaking, after the fallout, what has happened is that there is a lot of derating that has happened on the broadcasting space. So for us to turn constructive, we'll just not look at valuations. We think that once the ad environment improves, because see again in 1Q you will have IPL and the ad dollars will shift to sports category. So that there could be some delay in the ad environment recovery, and we will ideally wait for that rather than chasing the price and valuations at these levels.
Got that. Jinesh, the other big story came out of Karnataka, where they're talking about capping movie ticket prices at 200 rupees, including multiplexes. So that's got everyone concerned. What is the impact on PVR Inox if this takes place? I mean, how much does Karnataka contribute? If it's capped at 200 rupees, what could be the EPS impact?
Sure. See, Karnataka for them is about 12% of their overall screen mix. They have about 215 screens in Karnataka. And I think the order and in fact, see, it's not an order. They have just made a suggestion in the assembly that they want to cap the prices. But see, ideally in South, we have seen multiple states operate in the cap regime. And what one also needs to understand is that whether these caps will be there on weekends, whether it will be applicable to the premium formats or not, because cinema is basically a weekend business. So if the caps are not there on weekend, I think they are relatively better off. So I think the once and also one has to look at whether the order gets passed or not, because see again this situation arose in 2018. The order was passed, but PVR went into High Court. The order came in their favor, and they got certain exceptions when it came to premium formats. So it will be slightly premature to kind of think that this will have a significant negative impact on PVR. I think they will be able to figure out a way definitely from this mess.
And as of now, what is the rating you have on PVR? Because there was some mild promoter buying, and I've seen that after very, very long on PVR as well. So your rating, target price on PVR, and a quick word on Sun TV. You know, it promised at one point of time they have cash in their books, they have the IPL franchise, valuations in favor, but the stock has seen a big correction from the top.
See, on PVR, we have a hold rating. Our TP is approximately 1200 odd. And what we feel is that even in this quarter, I mean, if you look at the overall box office collections, they are at about 1700 to 1800 crores so far, and we have 20 days to go for the quarter. Given no big movies lined up, I think Sikandar is lined up in last week, but the spillover will happen in April, which means that effectively the collections will be in the band of about, say, about 1700 to 1800 crores or maybe 1900 crores for the quarter. And historically, whenever this has been the box office number, PVR has struggled for profitability. So one has to look at the near-term pipeline as well. And even in 1Q, I think barring Raid and one other Hindi movie, the pipeline on the Hindi side is not that great. So I think again over there, we'll have to wait when the pipeline improves. Some movies like Chhawa have done exceptionally well, no doubt about that. So on the pipeline side, once the improvement comes through, I think definitely a company with about 50% screen market share will benefit meaningfully if you have 2 quarters of good movie lineup. But that is where I think the problem is currently at this point in time. So we'll wait out for that. On Sun, Nigel, we don't cover it, so I will not be able to kind of give any view on that.